Best-selling author Rhonda Duffy, and I'm talking to you from a book that I wrote called Avoiding Buyer Remorse. And you know, one of the things that's important for you to know is assumable loans may be an option out there in today's market. 2008, 2009, like what we saw in the late 1970s when interest rates are really high, assumable mortgages are still available, and there's many people out there who just want you to take over their payment. They don't even want any equity out of their house. And there's many lenders who say, okay, if your credit's worthy, then we don't need to pay all the closing costs and reestablish a loan. So that's very good news. This was written by Jack Gutenberg, and you know, he talks a lot. You can find a worksheet and his information at mortgageprofessor.com, mtgprofessor.com. But you know, he talks a lot about the savings for assumable mortgages because you don't have all those mindless costs that are involved in doing that. And the lender's attitudes towards assumable mortgages are good, because you know, oftentimes they're having to remodify the loans or do what's known now as loan modifications, where they could still get somebody in at 7, 6, 5.5%. You know, you can do many things with an assumable mortgage as well. You can do a wraparound mortgage. You can apply some of the assumptions to the price. Whatever you're assuming, you can rework the loan and still not have a reworked brand new loan, which is attractive to a lot of people. You can still assume many FHA and VA mortgages. I mean, all of these things are very important to at least ask about when you're buying a house. Ask the seller, do you have an assumable mortgage? Because a lot of times all those junk fees that are done in closing costs can be avoided. Hopefully this has been an eventful video for you. If you need to find more information on avoiding buyer's remorse, check out tipsandformsforbuyers.com. That's tipsandformsforbuyers.com.